Okay, thank you so much for being here this morning at our Digital Euro event, Disruptive Technology or Digital Dystopia. Again, thank you so much for being here, and also thanks to Evelien Witlox, Lex Hoogduin and Wim Boonstra for being here to explain a bit about our subject of today. As I said, disruptive technology or digital dystopia. And it sounds a bit like a controversial title, which is obviously necessary when when you want to have a webinar like this. But it's also, I think, something that's truly the debate surrounding the digital euro. On the one hand, there are the people who find this technology impressive, countless possibilities. And there are people who are pretty much afraid of what this technology means and could mean for them. Some weeks ago, I was in Washington, D.C. at the IMF and World Bank annual meetings. And I was participating in a seminar, I was listening to a seminar with our Queen Maxima, who was very enthusiastic about the possibilities of CBDCs, central bank digital currencies, about financial inclusion. There are still 1.7 billion people in the world who do not have access to traditional means of banking, about efficiency, about innovation. However, on the other hand, I receive many messages from voters, from my constituency, that people are worried on the development of a digital euro or the central bank digital currencies, that privacy and big government, big business, big tech go hand in hand, and they have huge concerns on this. So it's important to start talking about this subject. And again, I thank you all for being here, because this is important to start talking about it now. I remember when I started my career at Kasbank, that was almost a decade ago, I was following market trends and regulations, and I gave a presentation to the board of directors there. And Kasbank, being a small custodian bank, so the underlying technology behind central bank digital currencies, or the Bitcoin back then, could be very disruptive for their business model. So I gave this presentation to the board of directors, and one of them said to me, and I still remember it very vividly, they said, Michiel, you shouldn't focus too much on these vage vergezichten, which is literally translated, these vague visions of a far distant future. And not only 10 years later, we're here talking in the European Parliament about it. We're talking about it at the IMF, at the World Bank, at the European Central Bank, in academics. So this is no longer something we can consider as speculative or unfinished. It is something that we should discuss right now. Because we live in a democracy, and in a democracy, we are in control of where society goes. But it is our task as politicians, as central bankers, as academia, as people from the business, to be transparent, open, and accessible to the people on where this is going, and to explain them what could be the benefits and what could be the downsides and what could be the potential pitfalls of such digital euro. Because while there's no single answer, it is evident that the evolution of central bank digital currencies will affect the whole financial system, one way or another. So I will introduce the speakers for today. First, we have Evelien Witlox from the European Central Bank. Thank you so much for being here. It's always good that we can have direct communication with the European Central Bank, and the ECB has one of its main priorities to talk to via the European Parliament, being a directly elected body, to be accountable to the people. So again, thank you so much for being here. We have Lex Hoogduin, former director at the Dutch Central Bank and currently professor at the Rijksuniversiteit Groningen. And Wim Boonstra, who is also a professor at the Vrije Universiteit, I believe. This is my old university, and you were in business for a very long time at Rabobank. So you will present the business side of a potential digital euro. For the program of today, we first start with the intervention of Evelien Witlox. You have to leave a little bit early, so you will give your presentation, and it's a webinar, so it's also possible for people from online to ask direct questions. We will do the Q&A directly after your intervention because you have to leave early. And then we will start with the presentation of Lex Hoogduin and Wim Boonstra, and then we start a general discussion, and we aim to finish at around 2011. So without further ado, I would like to give the floor to Evelien Witlox. And please remember, because of the live stream, I think there was some things wrong with the live stream. So please press the speak button. Then you know you are on screen. Thank you so much.
Well, thank you. I hope you will also project the slides that I've sent. But thank you again for inviting us to be here. As you said, we are currently in the investigation phase. I will say a little bit more about that. But one important part of the investigation phase is also to talk to all stakeholders. So that's also why we come very regularly to the European Parliament, as you just have said. We also do, and we'll come back to that, further interaction with the market and all stakeholders there. But thank you again. And then secondly, the title is about disruptive technologies. And I just want to make clear that the digital euro is not a technology in itself. It's a new way of payment and a new form of the euro. The technology that we will choose in order to realize this is not decided yet. So just to make sure that for us at this point in time, it's not a technology discussion. Of course, at some point we need to take a decision on this technology, but we find it important to first focus on the functionality of the digital euro and then only later look for the best technology to underpin this functionality. Okay, thank you again. So what I want to do in this presentation is to go into a little bit of the why of the digital euro. So why are we discussing this? Then what is the current project, what we're doing and the timelines, something about stakeholder management and some of the analysis that we have shared already so far with the market. So with that, I would propose that we go to the next slide. And that is, what is digital money? And I think that's a nice bridge to what I said before. But we see three different types of digital money. One is a liability of the central bank, one a liability of a private entity, and then you have the crypto assets, which we regard as not being a liability. So let's focus on the first two. So liability of the central bank, what most people know and recognize is cash. That's a physical form which is available for the general public, where they have a claim directly to the central bank. The other form, which is maybe less well known to the general public, but there are central bank deposits, which is the basis on which you have commercial bank money, and those are the liabilities of a private entity. Commercial bank money, e-money, and some of the stable coins could be seen as a liability of a private entity. And what we are discussing is an additional form of liability of a central bank. So that is the CBDC or the digital euro. And in our view, this will complement to cash and to central bank deposits. So it's not meant to replace either of the two. So it will complement, as I said, cash. So we will stay committed to cash. And on the other side, we want to be one of the solutions there. So we also don't want to have a dominant place in the payments. So there's plenty, and there should be plenty of space for private and commercial bank money solutions. If we then go to the next slide, you see maybe good to zoom out a little bit, but the ECB is not the only central bank that is working on CBDC. The majority of central banks is currently working on CBDC, which is more than 90%. Half of them are in the process of developing them or running concrete experiments. And of those, 2/3 think it likely or that they might possibly issue retail CBDCs. What we see is that the reasons to issue a CBDC are in general relatively aligned, although you see that the main reasons or the key objectives to do it might differ. So you can imagine that financial inclusion is a bigger topic, for example, in Africa than in Europe, although financial inclusion is also an important topic in Europe. So that's what we see there. And if we then move to the next slide, Thank you. Then let's zoom in on why issue a digital euro. So what we have been working on is what are really the key objectives to consider a digital euro. That doesn't mean that there are not other considerations, but these are the key objectives. If you're interested, we have on our website a 2-pager, so it's easy to read, which reflects the key objectives. The first one, it's about the digital euro as a monetary anchor. So what we see is that people use cash less and less to pay for their daily things that they need to pay. It differs a little bit per country, like Sweden, which is not a euro country, but it's like exemplary with only 8%, I think, still being used cash for payments. But also all over Europe, you see that the usage of cash for payments is declining. And that we prefer, in general, to have digital means of payments. And that's because we are online and we can only pay with a digital form of payment. And also the pandemic gave it a push. We do contactless or payments in the shop. So if we would move and we would just pull this further, and we don't know, but that the majority of our payments would be done in a digital space, we think it's important that you have also a safe asset in that space. Like you have cash now, you also have that in that space. For that, we need to make sure that it's widely accessible to all users in the whole euro area. So it's important that they can have this access. And we think that having this 2-tiered system, which we currently have with commercial bank money and cash on one side, where you have convertibility at par. So if you have your money at a bank and you want to have cash, you go to the ATM and you have cash one-on-one. And we believe that this gives trust to the whole system. And we believe that if you move to a digital age, it's important to keep that as well. And then, so one of the questions that has been asked a lot, but why do people care? They think that the euro is there. And I think it's a good sign, because that means that the current system works and people are not concerned by this is being a central bank money and it is a commercial bank money. So I think that's important. And I think it's very important going forward that we preserve that trust. Another element which is important very much for us is the strategic autonomy. And there are a couple of angles to that. It's about the unit of account, so that we all say, okay, if you want to buy something, that you say, well, that is so much euros, or that you don't say it's so much DM or it's so much digital dollars or something. And so that we preserve that. But on the other side, it's also more practical. If you currently look, we don't have pan-European retail payment solutions, so that a way of payment that you can use all over Europe, which is supported, underpinned by European entities. So we're very dependent there on non-European payments. And finally, not unimportant, is that payments have the tendency of a network effect, because I want to pay. And we believe it's important that we ensure that there remains sufficient competition to keep the whole economy efficient. Then moving on to the next phase. So these are the reasons why the ECB has considered the digital euro. And this is the investigation. So in summer 2021, the decision was taken to start an investigation of 2 years, which in practice started Q4 2021 and will end in Q3, Q4 2023. Here you see how we have structured the program. So the first quarter we needed to get the team together, to set up the governance structures, to start with the first analysis. And then also then we did a focus group with all stakeholders. And then in Q1, we published the first results of our analysis. Also, the report on the focus groups was published and discussed in the parliament. And then you see in each quarter that we bring different topics. So you need to, what I said sometimes, slice the elephant of the digital euro in different design topics. The process that we follow is that we do our first an internal analysis within the Eurosystem. Then we discuss it with the Market Advisory Group, which is a team of experts within the program. And importantly, we also discuss them with the ERPB. So there we have 4 major stakeholders from our side. So this is the banks, what we call the non-banks, but the financial institutions, the consumers, and the merchants, which are 4 important groups. We normally have a technical session on our analysis, and then there is room for a written procedure for input, and we have also bilateral interchanges with those 4 major stakeholder groups. That, together with feedback we get from the committees from the Eurosystem, will feed into a proposal that will go for final decision making to the Executive Board and the Governing Council. We follow this procedure till the end of Q1 2023. Then, if everything goes right, we have decisions on all major topics. And then in Q2, we will use to do a last holistic review, because you can imagine if you slice it, maybe in combination, there might be things that you want to adjust. Also there, we will do interaction with the market, and then we'll use Q2 and Q3 to finalize the advice, because the result is an advice whether or not to go to the implementation phase. But also, if the advice would be positive, to have an implementation plan attached. And in order to have an implementation plan, you need to have a design. Therefore, it's also so important that we have the interaction with everybody at this point in time, because this is the moment where we take important design decisions. If I don't go to the next slide, I would like to take you along on the stakeholder engagement. I've said a couple of things on this, so I won't stay too long. But we find stakeholder engagement crucial important for our program. So we have the interactions with the government, I would say, so the European Parliament, the European Commission, and the Eurogroup. We discuss with them the topics very regularly. We present where we are, we work, of course, very closely with the Commission, who has started work on the draft legislative proposal. We had yesterday a conference together with the Commission where this has been discussed in more detail. We have also the Digital Euro Market Advisory Group. There we have asked market experts to join. They join this group on their personal title, so not representing their employers, in order to make sure that we can get already in the analysis phase input on more detailed questions that we might have, and to give us feedback on our thinking. And as I explained, we interact regularly with the ERPB. Next to that, we work on with civil society. The ECB runs very regularly seminars with civil society. We have done one, and we plan to do one roughly every half year. And then apart from that, we do things like this. We come here, we go to conferences, we talk to people. So this is what we do on stakeholder management. And then in the next slides, I would like to take you along more on the content that has been discussed so far. So privacy is, I think, the most known and the most mentioned topic. You alluded to that also in your introduction already, but we got that back via our own consultation, but also in the consultation that was done by the Commission, this has been flagged. And we also believe that privacy is a fundamental right. We see that this is highlighted as a key concern. And what we saw in the focus group, that, and we know that I think our own experience is that in the trade-off in easy to use and privacy, also in focus group, you see people then acting slightly different. Having said that, privacy is a key topic, and I think there are 2 elements on privacy that we need to consider. So one is how much does the central bank or see of your payments, and the other one, in the end-to-end flow, how much privacy will I have? And especially in the last part, there needs to be found a very delicate balance between, at one hand, the privacy, and on the other hand, we all want to ensure that there's no financial crime, terrorist financing. We all want to avoid that. So we need to find a balance there. In the end, that will be up to the legislator to define this balance. But we do propose that, and Mr. Panetta alluded to that yesterday, that for lower transaction and maybe in combination with the offline solution, there would be more room for privacy in the payment. But then zooming in on the other part, which is how much does the central bank see? And what we are currently investigating is whether we can build the backend where we do the settlement in a way that we don't have to have any view on personal data. So that doesn't mean that the personal data is there and we are just prohibited by technique not to see it, but that we build it in a way that we don't even get this personal data in our system. And that's one of the things that we're investigating, amongst others, in the prototyping. What I have not said yet, but that is that the full anonymity, in our view, should be ruled out. So that's on privacy. If we then move to the next slide. So which use cases are we considering? And we consider 3 for the first release of the digital euro. So that doesn't mean that the other one will never be considered, but we also need to focus to make things, to do it in a stepped approach, if necessary. But so for the first release, we consider peer-to-peer persons, which is, of course, very close to cash. Then you have the consumer to business, either in a physical store or online e-commerce, and payments to or from the government as potential use cases. If we then move to the next slide, we have considered 3 foundational setups for the digital euro. It looks a little bit technical, but let me explain. So the one in the middle is the one that you would recognize from most online payments. That means that it's an online payment and it's validated by a third party. So there's somebody in between. So if you do a current a transaction online, it's always validated by a third party. Most, and just also be clear, most of the DLT solution, the blockchain solution, payment solutions are also an option too. So there is validated by a third party. So we think, because this is very close for the digital age, that we should include this in the first release. What we further want to explore, how we can increase the resilience in case of connectivity outages, for example. Then on the left-hand side, the other option that we have considered and have want to include in the first release of the digital euro is an offline variant. That one is much closer to cash, where there is a peer-to-peer transaction. That means that if you are sitting next to each other and you want to do a payment to each other, then either with the card or with the mobile phone, the technology we still need to find out, you can do this transaction without being anybody in between. We think that this is the one where we might be able to give a little bit higher privacy than on online, because they are not online. However, the technical feasibility and the legislative framework around that we need to further work on, and which we are currently progressing further with. And on the right-hand side, you have the online payments, but then peer-to-peer validated. And we have seen some experiments on this, but this has not been widely used or beyond the experimental phase. So we said we exclude this for the first release of the digital euro, and will not further analyze this in this phase. But of course, we will keep an eye on the developments there. Then if we move to the next slide, here are some things that I already mentioned. So on the online one, we believe that we could have some on top of the baseline scenario, which is the same privacy as you currently have with your payments, that there is a lower and higher degree of privacy for low value payments. And for offline, we propose to investigate that they could be fully private. But then we probably need to limit the value in order to avoid that this is misused. Higher value transactions should remain subject to standard control, so AML, CFT. If we then go to the next slide, another topic that is very much discussed, and I think Wim Boonstra will say something about this later, is that by the nature of the digital euro, this has impact on the liquidity of the banks, because instead of your money being a claim to a bank, it's a claim to the central bank. So it's different by nature. What we want to avoid that this setup will disrupt financial stability. You know, financial stability is very close to the heart of the ECB as well. So what we have said, we should avoid this by design. So what we have been thinking about is what would be the tools that we can implement in the design, so that much closer to issuance, we can decide which tools to use and also what would be the parameter setting. But one of the tools would be limit-based tools, which is limits on individual holdings. That means that you can have a maximum of a certain amount of digital euros. There's some technical terms that I won't explain because then I need more time, but what it actually said is because if you have a payment method with a limit, then you can imagine that in making payments, you run into obstacles like, okay, I have 40 digital euros, I need to do a payment of 50 euros, then the transaction will fail. Or you could make sure that it's topped up so that the transaction can't go through. Or the other way around, say the limit is 3,000 euros, you have 3,000 euros and you get 50 euros extra, then it needs to be declined, but we can then maybe facilitate that you can still receive the payment and then it's transferred directly into commercial bank money. So that's what it said there. The other tools that we're considering are price-based tools, and that is tiered remuneration, where it's important to say that tiered remuneration, so the price-based tools, we foresee not to have in isolation, so that you would have a digital euro with only tiered or non-tiered remuneration as a tool. That is not considered. So, but it would be on top of measure on a limit-based tools. A lot of questions go into this direction. So what would be the limit? What would be the height of the limit and so on? But we believe that this is not the time to, or we will not take a decision on this. So which tools to use and also the parameter setting needs to be decided much closer to when we're going to issue, because it depends on the economic environment at that point in time. But we will make sure that all these tools are there so that they can be used and that they can be set in a way to avoid the financial instability concerns that we have. If we then go to the next slide, this is about how will an end user get the digital euros and what will be the role of the current banks or financial institutions. And what we have said from the start is that the financial intermediaries will play a key role in distributing the digital euro. So it's not the intention of the central bank that you will hold your digital euro account at the central bank. You will hold your digital euro account at a financial intermediary. This financial intermediary will also be responsible for the KYC, the AML, CFT, and will have all the client interaction with you. What we have considered is the payment scheme approach. And let me explain this, because we believe that with the digital euro, it should be like cash. So if you have a digital euro, it should be independent from which bank you bank with as a payer, but also as a payee, so as a merchant. So if you bank with a bank in Spain, you have your digital euro account there, you get some payment means to pay with, like a wallet or whatever would be thought of. Then wherever you travel in Europe, you should be able to pay with those digital euro means. That means that on the merchant side, they need to be able to accept this one. So that means that we need to standardize and harmonize how this works, so that we can ensure that where you get your digital euro, you can pay everywhere across Europe. So that is the aim of what we call a scheme. So that scheme should make sure that this is secured, because it facilitates a homogeneous end user experience. It's also best positioned to ensure the pan-European reach, pan-Euro area reach, as I said. But it will leave sufficient room for the supervised intermediaries to add value-added services, to do innovation on top of the digital euro. And with that, I think I've moved to the last slide. Yes. So thank you very much. Well, if there's any question, let me know.
Yes, thank you so much, and thank you so much for this clear presentation. I will refrain from asking questions myself, because as a member of European Parliament, I'm always allowed to ask questions. But maybe there are some people online asking questions, and maybe someone in the room. Someone online?
Yes, we got some questions online, and most of them come down to one question. For an individual living in the EU, what problem is being solved by introducing the digital euro? What's the necessity?
Well, as I explained, so cash is being used less and less by citizens. So one use is something that I explained before, is that we believe this two-tiered system with having a safe asset gives trust to the system. So this is something that you as a citizen take for granted, and which is good. But we need to make sure also towards the future that this trust remains. So that is one, but it's maybe more difficult because we don't have this problem at the moment. And as said, that is good. On the other side, it is important. Payments is, I would say, key to the economy. It's also something like electricity and light and water. You think it's a hygiene factor, it just should be there and it should work. And then if it works, you never think about it. You find it logic that you get water out of the tap, that there is electricity. But we also need to make sure that that remains that way. So if we would move into a digital age where there is only digital payments, and payments is fully left to the market, the question is if we think if this would be safe. So like what Fabio Panetta also said, we cannot predict how the market will look in 10 years or 20 years from now. And we think about the current status quo, but you already described that we are not in a status quo, so things are depending. So maybe the parties that are now dominant in payments and which we trust might be different ones. You don't know, and they might be they might not be as trusted, worthy as that we are now. So we think that's really important. And as I explained before, also for the pan-European retail payments, we see that we are really dependent on non-European players for that to have a pan-European reach, and which is also is a concern for the ECB, but also for the European Commission, which also worked on the retail payment strategy already. So to have our autonomy and to make sure that we in Europe can guarantee that you can always pay, we find very important. So that's most important. And then, of course, these are very good reasons to want a digital euro and to maybe start using the digital euro. But we do understand that for an individual, probably you would choose something that's easy to use, that is safe and that's secure, that has a high level of privacy. And on that, of course, the central bank can deliver maybe better than private companies. So we understand that in the design, we need to take this along.
Thank you so much. Is there anyone in the room willing to ask a question? Please state your name and then ask the question.
Simon Rosa, Banking Association. Thank you for the very interesting presentation. It was very clear. I have a question about your expectations of the new European Commission's proposal. How does this relate to the work the ECB is doing, and what are your expectations? What should this legislative proposal address, and what's basically for the ECB to determine?
Yes, thank you for the question. So we work closely together with the Commission, so avoiding that we do the same analysis twice. But then, of course, everybody takes this back to their own remit to work on this. For example, the consultation that has been done by the Commission, we of course look into very carefully as well. So in the end, it's not up to us to say what the regulator will regulate, but there are a couple of topics that we think are for sure need to be in the regulation. That's and we have alluded to that, but that's privacy, AML, CFT, adherence to some certain rules that are already there, data protection. So these kind of things that we assume to be there, international use of the digital euro. So these are a couple of the elements. Legal tender, of course, is a very important one. And on the other side, the more technical design decisions of how it looks like, we think are more in our remit, as well as, for example, looking to financial stability. That's close to the heart of both of us, for the European Commission and the ECB. So that is some where we need to discuss how to best do this, but we think that from ECB's perspective, we will be also working on this.
All right. Maybe there's an online question or someone in the room also willing to ask. Okay, first an online, and then I go to you. Is that okay?
Yes, you mentioned during your presentation that full anonymity should be ruled out when talking about privacy. Does that mean that you have to identify, to own, and to use the digital euro?
Yes. So what we foresee is that that you need to open a digital euro account or a wallet, depending on the technical setup, but that you need to identify who you are. So yes, that we need to do. Then especially with the offline variant, we look like a little bit more like with what you have with cash. With cash, you also have an account, and if you withdraw cash, then the bank can see that you have withdrawn whatever, 100 euros. And with offline, it could work the same. So you will offload 100 digital euro on your offline device, whatever it may be, and then you can do transactions like that. So that is the higher level of privacy that we think could be considered for offline transactions. So, but that indeed means the full anonymity is ruled out, means this.
Okay. One more question from room.
Yeah, so my name is Marieke van Werkel. I work for the European Association of Cooperative Banks. And by the way, we are part of the Euro Retail Payments Board, and we have dialogues with the ECB, which we appreciate very much. Let me state that up front, but the dialogues we have with the ECB are at this moment quite technical. The elephant in the room being sliced in parts so that we can get the bigger picture. There's one question that occurred to me whilst I was listening to you, which we have never addressed in that particular ERPB forum, and that's related to the other side of the ECB, which is the side that supervises banks. And I was just wondering how in the ECB, is there any dialogue also between your part of the ECB and the single supervisor, which is responsible for making sure that the banks adhere to the prudential requirements, that financial stability can be secured, as there is this relationship between the potential digital euro and the financial stability factor?
Yes, we have some interchange. It's not like we have committees within the European Commission. So yes, we do sometimes talk and update the SSM on the progress that we're making and answering questions that they might have. Indeed.
Okay. Anyone else in the room or someone online?
Yes, I got another question. How will the implementation of a digital euro affect Forex trading?
Wow, that's an interesting. Well, I can't give a full answer, I think, on all aspects because it's a sort of rather a broad question. But in general, we say the digital euro is just a euro. I think that's important to mention. So there is no difference between the currency in that sense. We are investigating on cross-border usage of the digital euro. And we will publish some of our first analysis on that later this week, by the way. So I propose that we wait for that, and we will publish, and then you could say something. We can get some feedback on that later.
Very interesting and broad question on that. Anything else online or in the room? Anyone willing to have a question? Maybe Jean, you have some.
Well, my name is Jean Wanningen. I'm the EPA from Michiel, an economic advisor. I want to focus on your first answer on the first question. I understand the trust issue of the CBDC, but aren't you afraid that it also might harm the smaller commercial banks because they are competing for deposits? What is your opinion about that?
So we have done an analysis, which is more a broad analysis on the digital euro, and we're further on the impact, on the liquidity of a potential issuance of the digital euro. And we are still further refining our thinking and our modeling on that. So that's also why we discussed this in the context of the ERPB, or together with some of the access. We had a good exchange also with Boonstra on this, so that's really appreciated. We even interact with some banks that are willing to open up their books for us to show what would be potential input, so that we can step by step better understand what would be the impact. But from the first analysis, as was also shared with Fabio Panetta in the Parliament, we think that an issuance between roughly 1.5 trillion in total could be supported by the full market. Of course, I understand your questions on the smaller ones. So as I said, we are continuing to building on the models what we need to do, and I think it's important, like I said before, the usage to decision which tools to use and also the parameter setting we can do much closer than issuance. It's not something that we need to decide in the realization phase, in the investigation phase. What we need to make sure is that the design is built in a way that you can put these limits, that you can parameter this, so in order to adjust it to the economic situation at that point in time.
Thank you so much. And I think we can move to maybe a last online question, because due to time constraints, I think you have to leave after this last question. So did you have one more? Or?
Yes. One more question. What are the biggest disadvantages you think of the digital euro?
I see only advantages. No, I think, but I make a joke of it, but I think it's important that we stress what are the benefits and why it's important to do so. I did that a couple of times. We think it's really important that we ensure also towards the future that there is this access to central bank money, and that we can do payments also in a digital age in a safe way together. We also believe that with setting up the infrastructure for the digital euro, that might also bring benefits for the full sector. So the fact that there is more competition, it can be also beneficial for all players, I have to say. And in the end, of course, for the citizens, if you have something to choose, that would be good. we do see some risks, and I think financial stability, we discussed this a couple of times, is a clear risk that we see, and that we think we need to cater for by design. I think that's the biggest risk that we need to check and to make sure that we take this on board, which we do. Yeah, I will leave that.
Thank you so much, and with that, I will free you of your obligations. Again, thank you so much for being here on behalf of the European Central Bank. It's very much appreciated. Also, Fabio Panetta, he comes to the European Parliament quite often, also to give us us members of European Parliament an update on where the Digital Euro project is going. I think you are on the European Central Bank side quite ambitious in your timeline. But obviously, it's only the start when you finish. Then we as legislators and governments, we have to discuss on the actual implementation and the proposals as being done in the financial system. And we will keep up with it. And I hope we can continue having this dialogue also directly with the people in the future. So thank you very much.
Thank you too.
And then I think we can move on with our interventions for Lex Hoogduin, a former director at the Dutch Central Bank, professor at the Rijksuniversiteit Groningen, and also quite known for his Twitter feed, which is feeding many people interested in macroeconomics, monetary finance. But I very much look forward to your explanation. I know you have a bit of a different angle to this Digital Euro project, and I look very much forward to your intervention.
Thank you, Michiel, and thank you for the invitation. Let me start by saying that I think it's very good that the European Parliament
maybe move a bit to the left, I think, because you're on the camera. I think you are only half in the screen. So if you move a bit to Evelien's place, I think.
Shall I move? Let's do a swap. Okay, so it's highly welcome. Probably there wouldn't be any misunderstanding here, but just to be sure. Okay, so highly welcome that the European Parliament is involved at an early stage in this project of the central bank digital currency. I also think it's very good that you have a separate webinar, and I already would encourage you to continue to do that. And I will make clear why that is the case. First of all, I think the launch of the ECB, central bank digital currency, is a political project. It's a highly political project, and I do think what we see is there will be a first phase where there is a clear focus on the payment system and payment system issues and providing solutions to that. However, there are more ambitions than just improving the payment system. And that's clear if you think about it. But also yesterday there was a big conference here in the Parliament, and that was clear from there several speakers that it's not just about, and probably not in the first place, in the end, about payments, but you have to get it launched. And I think to get it launched is the first phase. And in the first phase, there is the focus on the payment system. So I will say a few words about what I call the first phase, or the short-term aspects, however you call it. And then I will move on to the wider ambitions that play a role. So first of all, if you look at the shorter term and basically also answering the first online question, which I very much understand, in the short term, if you launch it as a payment unit, which then can be supported by payment solutions, I think it's not a big deal. It will have limited impact at most for the citizens. They will hardly benefit from it because the functionality will be restricted. The amount of CBDC will be limited initially. And if you were to stop there, the question why to do it at all would come up. There seems to be no clear business case for the payment area. There is no real problem that needs to be solved. If there's one thing where we have made huge progress over the past decades is improving the functioning of payment systems, and that has been done in a framework where the market played a central role. And it's different from country to country, but it's absolutely clear that the market, as it functions now, has the potential to deliver a secure, efficient, reliable, and inclusive payment system. And especially in the Nordic countries and in the Netherlands, you have the proof for that. So there's no clear business case. While at the same time, there are already in that initial phase, has been mentioned a couple of times already, there are financial stability risk of disintermediation that can play a role, and that is a huge problem, I think, for launching. If you take that seriously, it's a huge problem for launching the CBDC. As said, there's not a kind of demand from the public. We want to have this CBDC, so it's a supply side driven project where you. Different from what you do in the market, there would be a need, and you know that there is a need, and then you launch it here. You have to impose it. Is of course is a bit of an exaggeration, but it's supply side driven. But if you go too far and make it too attractive, then you increase mediation risk. So you should launch something that is attractive but not too attractive. That's a bit of squaring the circle. So I'm very, very interested in this first phase, how you could deal with that. Then I move on to the longer term aspects or the wider ambitions. It's clear that the ECB envisages and the Commission, of course, that the CBDC plays a role in the geopolitical ambitions of the EU, and the European Commission, also the ECB, some years ago, it's not that long ago, changed the policy with respect to the international role of the euro. While the euro was launched, the policy was always we should neither hinder nor promote the international role of the euro. And you cannot, it's impossible to just say, oh, I designed something and then that will play an international role. That's not how it works in the international monetary system. And the view was always, and I think that's the correct view to this day, that you have to have your internal economy in order. You have to have a stable currency. Price stability should be maintained. You have to have a strong internal economy to be able for foreigners to become an attractive currency issuer. So it's simply, again, a kind of a supply side approach that you think that you can, just by deciding it yourself, that you can decide we want to have a an international reserve currency, and we can use that for political reasons. And let's say whether you want to you use your currency for as a tool in foreign policy is of course a political question that then in the background also plays a role. But however, at the moment, I think if you look worldwide, it is totally excluded. I think that the euro can really challenge the dollar. There, I think there's a far more important, interesting process going on because of the growth of China. The question is at what time and in what context will the renminbi take over the role of the dollar, and will that be a peaceful process? And I think that the importance of that being a peaceful process is the real political issue also for the EU, not imposing its own euro on the rest of the world. And let's say that broader concern, the shift towards the east of the reserve currency, the potential shift, prompted Mark Carney, the former governor of the Bank of England, to propose that the IMF would develop a digital reserve currency for the world, a digital SDR. And I think thinking about that issue and perhaps taking up that issue is it would be far more effective than trying to force your own digital euro on the rest of the world. And finally, on this issue, if you look at the current fragmentation of the world economy, that seems to result from the invasion of Russia into Ukraine and growing tensions with China. I think it is at best we could turn the euro into a regional reserve currency, what it to a certain extent already is, but it's of the wider issues that will concern us in the coming decades in the international monetary system. Then secondly, you could see it as a defensive move versus cryptocurrencies. I don't believe that will work. Neither do I think that it is needed at the moment. And the defense against cryptocurrencies, if need be, if felt necessary, can be organized through legislation, and that's already being done. I also feel in this same context that there is a tendency to try to protect the European citizens against foreign big tech. And here the question really is, will that serve the consumer? Isn't this protectionism, which in the end will make the system less rather than more efficient? So the jury is out there, I would say. Now somewhat more, I think, motives that have not mentioned at all this morning, I think. It's motives around monetary policy. Financial stability has been mentioned, but broader monetary policy, economic policy, and also, as I call it, enhancing the power of the state in a way. That's a highly political issue, of course. If you were able to launch a digital currency, and the current trend of banknotes circulation going down and down further, which is already quite advanced in the Nordic countries and also in a country like the Netherlands, It at some point would become possible for the ECB to set negative interest rates via the digital euro, and they can move further down in the negative territory than is the case nowadays. So that would help the ECB to get rid of what is called the zero lower bound problem, that you cannot go much below zero. We have done that, of course, the past, 8 years or so. Now, of course, you can. Here the question is, how do you view that? Is that something that is enabling the ECB to do things that they cannot do nowadays, or is it a reason for concern? For me, it's a reason for concern, because in the end, negative interest rates are inflation by another mean. So, in my view, this is something that should not be pursued further, and it would the integrity of the currency. So that's that on this issue. There is, if you take a very long-term view, there is an opportunity in a way to create a more stable financial system. And also a more effective monetary strategy. And in the limits, so this is not something that will happen overnight, if at all, but just to give a kind of a vision, what could be developed over time, is that all money as central bank money, as CBDC. So no longer money creation via the banking system at all. Of course, at the moment, it's denied that you want to do that, but there is that possibility in the longer term. You could as a strategy, you don't need to do inflation targeting anymore, because all money is on one ledger, one account, so you can just have a fixed money growth rule. You can almost run that by computer. You don't need the ECB anymore. You don't need banks anymore for creating money. So there are no longer bank runs possible. No longer deposit insurance, of course, then necessary. You can increase the money supply in a neutral way, because you can give every holder of money an additional, exactly the same additional percentage. It's far less complex than inflation targeting. So, from a monetary theory point of view, that's good. This sounds very, very attractive. On the one hand, there is a high risk, of course, that this power that you then have, because all the money is concentrated at one point, and there's no central bank anymore. At least there's no visible role. So the control over those accounts can then be taken over by government. So they can then start to overissue money. There's, of course, then a blurring monetary and fiscal policy. You could easily introduce a system whereby the only role of the central bank no longer exists, is to credit every year the accounts by a certain percentage. So that could sound very attractive and could be pushed in that way at some point. Is it necessary to go this direction to improve financial stability or to improve monetary policy? I don't think so. There are other means of doing that, so there's no necessity. Then my last point. We have to be aware that, as I said, it will start small. So all the more longer term concerns will be will be taken into account. But if over time the amount of CBDC growth, more and more data become available, potentially for government, potentially, as said, of course, this will be taken care of at the beginning. Also because this is very attractive, because it would, if you have all these data, that will assist you enormously in shaping your economic policy. Policies can be targeted far better. And we only have to look today at how difficult it is to provide energy compensation support targeted at different people. That can be very attractive for politicians, for governance. And even more so if at some point CBDC will be made programmable. Of course, that's the P word that you don't use, but there is that potential, and certainly that will not be done at the beginning. Nobody speaks about it from the official side. Well, there of course you can. So that's the dark side to the potential that there is for more targeted policies, and then for a bigger role of the government. Then again, if you want to go that direction, that's of course itself a highly political question. But the dark side is there in any case, that moving in the direction of a surveillance state. So again, you can say this is all exaggerated if you look at what's on the table. But I do think in thinking about this, and certainly for politicians, that's why I'm so happy that you are involved at this stage. You have to keep in mind with all the legislation that comes out, what does it mean for the potential of going further? And you should, I think, if it would be wise to ensure that the legislation is not formulated in a way that next steps can be taken at a relatively technical level. And I think that's the important task that you will have. Also, from my own experience, I was involved in, let's say, the launching of the euro and drafting the EU treaty, the Maastricht Treaty at the time, and we thought, highly naively, has become clear that if you formulate something in a treaty, then that's how it will work in practice, and that is not the case. So you have to be very precise in your legislation, that you as politicians make sure that any next step that will be taken and that is fundamental from the perspective of a longer term developments is under your control. Because I'd like to end with a quote from by the economist Murray Rothbard. Again, not envisaged for the next 4 or 5 years, but something that you have to keep in mind. Money is the nerve center of the economic system. If the state is able to gain unquestioned control over the unit of all accounts, the state will then be in a position to dominate the entire economic system and the whole society. So if you look at legislation with that in mind, I think you're on the right track. Thank you very much.
Thank you so much. And I think that you raised a lot of points that many people have in their minds when thinking of this, the side of the digital dystopia. So as I said in my introductory remarks, you have on the one hand, I went to the IMF and they were all very enthusiastic about the possibilities, even about the programmability. There was one delegate from China who was sitting on the board of the IMF, and he was very enthusiastic that you could give food stamps, and then these central bank digital currencies could only be spent on food. Or, as you said, exactly the solution of having energy compensation. You get your energy compensation in your account, and you're only allowed to spend this on certain types of energy. So it's a programmability which gives tremendous power to either central banks or governments. But what I also think is interesting that you raised is the business case. It feels like sometimes it feels like the digital euro is a solution looking for a problem instead of the other way around. Well, Wim, to make the connection to Wim Boonstra's talk, what is the business case for retail banks here? Because in essence, central banks will act as a custodian for money as the central bank digital currencies. And as Evelien Witlox said in her talks, there will still be a third party or an intermediary party that would take care of the either payments, AML, KYC. So then the question that arises for me is, what's the business case for a traditional bank in this case? And I think I can more or less come up with and that would involve big data. But I very much look forward also to the business side of this digital euro proposition that's on the table. So I'm very glad giving you the floor, and I think you can use that mic, and you'll be in the center. If you use the mic that's in front of you, yeah, that one, and if you press the button, then you'll be center stage.
Okay. Oh yeah. Right, thank you, Chairman. First, apologies for me wearing this strange cap. It's not that I'm here to make a statement on Croatia. It's also no disrespect for the audience, but I have a treatment on my head skin, and it's a really ugly sight. So forgive me, I would say. This morning I had breakfast with Lex, and we concluded that we agree on many things. I had already prepared my slides. So I said, well, you go first, and I will fill in the holes you left or try to go more deeply in some aspects you didn't touch upon. And of course, the statement, it is a solution looking for, next slide, please. And then the next slide. I will skip some slides because something have already been discussed here. It is looking for problems. One of the things we hear of cash is disappearing. That is because central banks look at the payment statistics. But if you look at the monetary statistics, they tell a different story. Cash isn't disappearing. In the Netherlands, it's slowly growing. In Sweden, it's slowly growing because people retain cash. It's the ultimate backup. It's the ultimate anonymity. And it's, well, they like it. They don't use it very much, but they don't want to get rid of it. So cash is not disappearing. Financial inclusion, our Queen told about it. It's extremely important. If I was president of the central bank in Bolivia or Peru or Malawi, I would say, yes, I agree with this. But in the Eurozone, it is not an issue. Financial inclusion is over 90% in all countries. In many countries, close to 100%. I just checked the data, so I'm quite sure about this. And everybody already has a right on a bank account in the Eurozone. So this argument, in the dustbin. Cross-border payments, retail CBDC has no impact there. It's simply done. If you want to increase strategic autonomy, improve cross-border payments, then you have to focus on wholesale CBDC. We have already said, if you really think that a CBDC could do something for the international position of the euro, strategic autonomy, all that kind of things, wholesale CBDC is much more important. China knows exactly what it wants with the renminbi. And China is a patient, but they work very straightforward. They know what they want. They want that the renminbi is the world currency. And I was very happy that Mark Carney wrote his position on this, because 10 years ago, I already did the same thing. Make the SDR into a world global anchor. And later on I said, well, combine it with the technology behind Libra at the time. And then you have the ultimate global anchor, which stabilize the world economy. There's only one problem: the US will never accept this as long as they think that the dollar is doing fine. So we're moving towards the conflict scenario in the longer term, I'm afraid. And the problem is that the euro, and it's not bringing the euro to the world dominance, now just preserving what the euro is, then you have to work on other kind of stuff. The digital renminbi is a direct attack on the international position of the euro. The international position of the euro's reserve currency is stagnant for 20 years. And one of the reasons is, and this is a highly unpopular statement here, we don't have a common safe asset. And as long as we don't have a common safe asset in the Eurozone, every talk about strategic autonomy, strengthening the international position of the euro, strengthening the capital market union, dream on, is not going to happen. You have to solve this problem. And this has nothing to do with access to finance for weaker member states. It's a difficult, we simply need a common safe asset to strengthen the euro. Without it, it will not work. A digital euro will never be identical to cash. This is one of the points I would like to make when Evelien was here. I didn't realize that she would run after her speech. I thought it was slightly longer. Because if you have this peer-to-peer thing, it has to reconnect with the database after 3 or 5 transactions, simply to check whether there's no digital counterfeiting, double spending, that kind of stuff going on. So it will never, ever have the same degree of anonymity and privacy as cash. We move. Well, the unreliable stablecoins, the ultimate stablecoin, you already have one in Europe. And that's, it's 1-to-1 with the official euro. It's 100% covered by assets. Part of it is highly liquid assets. There's also a strong capital base behind it. And all private parties cooperate very smoothly. The ultimate stablecoin is deposit money, the money on your bank account. It is already there. Why invent something that's already there, or why be afraid of something that's already there? One of the statements that Evelien made, I disagree on. Cash and the confidence in cash is much older than central banks. It's much older than central banks. But many people in the Netherlands don't realize that the Dutch central bank only had a monopoly on cash production in 1952. The British central bank, during the 19th century, there were over 160 banks issuing banknotes in England. And if you go to a holiday to Ireland or Ulster or Scotland, you still see Scottish banknotes in circulation there. That's some monetary folklore. So the whole argument that you need to have a central bank to have confidence in the payment system, no, that's not true. And Friedrich Hayek would strongly agree with me on this one, because he said the status of legal tender is very often the beginning of a lot of mess. Hyperinflations are always, and luckily there are not many hyperinflations, are always caused by a government-central bank combination. Commercial banks cannot create hyperinflations. Simple as that. So this is an argument. It's I like the central bank. I understand the central bankers like it, but it's simply not true. If I would like to carry on to the slide, well, the business case not overwhelming, the disadvantages. So next slide, and the next slide. This one. There are some huge disadvantages, potential disadvantages here. And it has already been mentioned, the disintermediation. And what, well, I work with a bank, so I say, well, you work for the bank, you're preaching for your own. That's not true. Rabobank is a big bank. We have our big savings bank, but we also have a big financial market operations. So wholesale funding, we issue bonds, we issue our member certificates, we have the whole infrastructure available. So if savings would disappear from our balance sheet partly, we would not be happy, we would have a challenge, but it would not be a disaster because we simply have everything available. But the European banking industry has thousands and thousands of banks. Many of them are savings banks, cooperative banks. Those small banks don't have access to financial markets. So they are much more vulnerable for money flowing out to CBDC than the big commercial banks are. And that's an important thing. And this is nothing that is covered by the research by the ECB on a macro level. You need to have closer look at individual banking systems Otherwise, you can reshape the whole structure of the European banking industry unintendedly, which cannot be the idea behind it, I would say. So this really is an important issue. And of course, there will be limits. But one of the problems, and I saw something about customer to corporate payments, the whole corporate sector is not included in this project. For a private person, it may be interesting to have a 1,000 euro account with the central bank, but for even an SME company, it doesn't make sense. Then I'm doing a CBDC payment, which immediately will run from his waterfall account back to his bank account. It doesn't make sense. The solution, of course, is a wholesale CBDC, which should be a completely different thing. Or once the corporate sector wakes up, because they're still in a deep winter sleep, I have the impression, and they start to plea for higher limits for corporates. And then, of course, you have your hole in the whole limit idea, because there will be a business case for corporates just to circumvent the hard limit. So this simply is something which is not resolved. Alex already mentioned the interest rate, negative interest rate. The whole discussion on interest rate doesn't make sense if you say, well, the CBDC should have a high level of privacy and anonymity, because you cannot pay interest rates to an anonymous account, can't you? So this excludes each other. And well, we have tried, well, I work with Marieke, have contact with the ECB on, from the cooperative banking sector. We brought this point forward. There are things that options that exclude each other, and they're all on the table. They're also on the table, and it doesn't make sense. One of the real risks here is that in times CBDC is not very attractive for people. We did some, the Dutch central bank did some research there, and most people didn't know what it's all about. And secondly, only if the central bank would start to offer higher interest rates than the commercial banks, they consider to massively shift money there too. So it is a danger that we are building something where there's no real demand. So it's more or less sleeping thing. And then we will have a banking crisis, because once in severe case you have a banking crisis. In 2008, in the Netherlands, I'm talking in the Dutch context, we had big bank runs from two large banks, but the liquidity remained in the system because they shifted the money to other banks. If they would have a CBDC there, I think, because the whole consumer confidence levels were extremely low, the people would shift massively all their money to the central bank if they had the opportunity there, which would make the liquidity crisis much more severe than it in the end was. It would be a kind of Lehman Square scenario. Well, but now we have hard limits. Nobody's interested in it. And then we have a crisis and people want to shift to the center. And it's given back over the waterfall because there's a hard limit. That would be killing for confidence. That would not be a good idea. There are some things, and I don't understand that the supervisory division of the central bank doesn't ring the bell, because if you would have strong flows between savings and CBDC, banks, especially smaller banks, would not be able to meet their net stable funding ratio requirements. It may even become more difficult to meet your liquidity coverage ratio. So actually it makes fulfilling the supervisory criteria more difficult. But of course, it all depends on the design of CBDC. Would this hard limit be 400 euro? I think we can deal with it. Would it be 3,000 euro? Then it might be a big problem for many, many banks. And this simply are things which is not discussed here. 2 slides down the road, please. The second thing is, if the position of the central bank would more dominant in the payment system, it fundamentally changes the position of the central bank. Because the central banks, all central banks, including the Dutch central bank, the British central bank, they all were established. The Bundesbank is an exception because it only established in 1948. They all started as commercial banks. They became the dominant commercial bank, which gave them a more or less primus inter pares position in the financial industry, and in the end it was formalized and they became a central bank. But during all those times, they had private clients. Those private clients were eliminated from the balance sheet. Well, you worked at DNB, but I recall that some staff of DNB still had their payments account running at the central bank. You were one of them, I suppose. They were decades just to smoothly move on. And then you come back just to be sure that you can be a supervisor and that you are not competing with the banks you're supervising. And if the central bank becomes a major player in the field of banking, first, it has to meet all criteria. So it has to invest in client departments, in advisory department, in compliance. They have to invest in systems. It should meet all regulation that banks do. Who's going to check whether the central bank is doing a good job? Question one. Question two, is the central bank direct competitor of the private banks? Is it a logical situation that it still is supervising the central commercial banks? I think that's an illogical combination. So it really changes the situation. It becomes too large. It is the most attractive bank to hack. So for cyber criminals, the central bank becomes more and more attractive, the more and more dominant it becomes. And in the ultimate nightmare scenario that Lex sketched a couple of minutes ago, if it in the end it will become the only player there, one of the negatives is it becomes a single point of failure. If you want to hack a country, simply hack the central bank and nothing functions anymore. Another disadvantage here is that the moment you take away the money creation function of the private banks, which we have had for 400 years, I think. But the Sustainable Finance Lab, for example, thinks it's still a good idea. Then the whole payment system, but also the whole credit system can become politicized. I said it comes closer to the situation where the Soviet Central Authority decided the color of the Ladas of next month's production line. It simply becomes, and I'm not anti-government, but it could be too much. I think that's a very, very bad idea. Next slide, please. This is more or less what central banks are thinking about. So what we will see here is you see the central bank, which of course is Summit in these pictures of the central bank. Then there is the kind of software, this is the access, and then there's a line of private interface providers that actually should do all the work. From the central bank point of view, this is a logical thing because they can delegate all the hard labor to the private sector, I'm afraid including the costs, and retain its supervising role because it's not directly interacting with clients. It's not a bad design, but the business model for such a private interface provider is completely unclear. Within Rabobank, I can say that there are people that say, why should we ever want to do this? Are we going to be compelled to do this? Or can we say and if one of our clients say, well, we want to have a CBDC account, a central bank, can you do it? And then, well, we have some subsidiary in the north or something like that, but actually we'll do it. But Rabobank doesn't want to do it. Maybe. It is a scenario. And because the business model is completely unclear. The next slide is about the ethical questions. Much have already been said. I must say that I hear things about programmable money. You already gave some examples. There are more there. One of the things I hear, for example, is that if you pay with CBDC to a SME, then that the tax part, the VAT part of the transactions immediately is transferred to the government, which is one of the technical people at Rabobank are very enthusiastic about these things. The economists are less enthusiastic here because it would be a major breach in autonomy and liquidity management of an entrepreneur, for example. Very bad idea. There are also good ideas, but I think that if you have smart contracts, for example, they should always be part of negotiations of independent parties that agree on a certain conditionality in a contract. And these contracts already are there. If I, in the regular system, do a payment, sometimes I buy something on Katawiki, and then I put my money and it's only given to the guy who sold one the moment he can prove that it really is on its way. This kind of contracts, well, you could do it in a more handy way, more advanced, using blockchain technology, whatever, but it's a voluntary agreement. But the moment that a government can say, well, here you have your money, but you can only use it for your social insurance, for your healthcare spending, or only spend it for food. I don't think that's a good idea. And if the majority of the country after the election said, yes, this is a great idea, be my guest, then I'm a minority. But this is a decision that should be made by politicians long before the central banks make it technically possible. Because once it's technically possible, it will be used sooner or later, in silence or not. Apart from this, the funny thing is that the moment I have this, let's say I'm receiving a social allowance, and I can only use it for healthy food in the cheapest supermarket. Cannot buy a bottle of wine or a bottle of whiskey or smoking, whatever. That's programmed. The moment I spend this money somewhere, does it keep its character? What should the shop that keeps this money? Or is it from that transaction onwards just falls back into normal money which can be spent everywhere? This is technically quite a difficult thing. The first thing doesn't make sense. And the second is technically very difficult. And secondly, it would be easily to avoid. I do shopping for my neighbor, give it to her, get cash, and go to the liquor shop and buy my bottle of whiskey. It's easy to convert. So we're talking about all the things that could be possible without thinking about is it really what people need? Is it really a good thing to do? And is it really manageable? Or is it easy to circumvent? The whole design here, the ideas, and that's the feeling I have, is that the technical people are running far ahead, and many people at the ECB have no idea in the end what it would look like. I think I'm more or less running out of time, so I have I think I said what I wanted to say. Open for questions.
Thank you. And I think it is quite clear that from the business side, there is also quite some skepticism on the actual use case and business case of a central bank digital currency. And I do believe that, as was said, I agree that we should also be wary of what is called mission creep. So you set out for an initial idea that you need to have more convenient payments, and this digital euro will make it through smart contracts much more convenient to do business with each other. But then there are other caveats coming along the way. So I think we should be very careful on the possibilities, the programmability of the digital euro, and we should be very wary about it. But I did like the idea of the wholesale CBDC. I think that could indeed be a use case scenario. However, it's not being discussed, if I understood it correctly.
We have put it on the agenda. Marieke is the witness several times, because that really could do something for the autonomy of the Eurozone. For example, what I see, China already has developed its digital variety of the renminbi. And as far as I understand, it will be very easy for a client living in Africa, for example, exporting goods to Africa, to have his payments directly in renminbi on his smartphone. He can directly do his shopping in China. And of course, it's not really convertible, but you can buy more in China than in Malawi. So this is a big thing. And this continent, where it is the only part in the world where the euro has some position, but that's left over from the French colonies there that, of course, had the CFA franc, and now they are still oriented on the euro. The euro is not popular over there. It's just something from the past. And this will be the first part where we will see that the share of the euro in international trade simply will decline. And, well, before I retire, or maybe in 10 years, we will see that renminbi will be a larger currency in international trade, goods trade, service trade, than the euro. And it's not that we should develop the euro to be a world currency, but we should develop it that it can be strong enough to operate as an autonomous region. China and Russia are already working on an alternative for SWIFT, and it's working. It is smaller and it's more simple, I understood, but it's already working. Europe doesn't have something like that. And if European politicians say we want to go there, and Americans said we go there, the US financial world goes with the US simply because they can see anything you do, and the punishment is high if you divide from that. And that's political autonomy. And this has nothing to do with a retail CBDC.
Very interesting. We're running out of time a bit. So if there are online any questions to either Wim or Lex, then if you ask them. And I think we have maybe 10 more minutes.
Okay, the first question is for Lex. Do you think it would be a good idea to have a referendum in the EU on the implementation of the digital euro?
Well, that's a question, really a political question on, let's say, where you use referenda for. So it's not my priority. I don't think that I would say this is something that's really needed. I think what is needed is what I said at the beginning. That that politicians are involved. Our chosen representatives are involved from the beginning until eternity, as it were. So I don't think why for this issue you should have a referendum than for any other issue. So that's more a debate about where do you use referenda for, and I don't think my priority would be to mix that up with the real political questions that need to be discussed.
If I may add to that, I think as politicians, it's our responsibility and our role to engage the audience, to engage the voters in where this digital euro is coming. So that's invited the ECB to explain where do they stand, where do they want to go. It's unfortunate that Evelien had to leave a bit early because I think we would have an interesting discussion with, especially after the presentation by Wim Boonstra. But I do think we need to have these discussions because we need to be on top of the legislative files as well. That's coming from either the European Commission, it's coming from the European Central Bank. We need to explain it to the voters, and then the voters can always decide at the ballot box whether do they want this or they don't. Is there another question online?
May I
quickly
add? I think referenda are dangerous. If you, for example, in Switzerland, there was a referendum on Volgeld. 100% cover liquid money. The people that wanted this told some things that simply were not true. Not true. You can see it, not true. Still, 25% of the Swiss population went along with them. Some topics are really too difficult to have in a binary referendum. And I think if you have a well-informed parliament, and these issues are well discussed in election times, then the population knows what to do.
I think to add one final thing, it would be very difficult to formulate a relevant question here. It's highly multidimensional. There are political issues involved, but also highly technical issues that have political consequences. So I really do think you need the intermediation via the politicians. But they should be involved. And as I said, they are at the moment. So that is ensuring for me.
Then I have another question for Wim this time. What would be a good common safe asset for the Eurozone?
Well, you're asking the right person because I was the first one ever in 1989 who proposed common issuance of debt, conditional. With conditionality included. I did win a prize with it at the time, it was in English, but the world went in another direction. we need that which is issued either by the European Commission or by the central bank. And the last thing may surprise you, because the European Central Bank doesn't issue securities, but many central banks in the world do. The Bank of Japan does, they do in Switzerland, Korea. There are about 30% of central banks issue their own securities. This would bring many advantages for Europe, because it also, but this is a completely new discussion, which I like to have here, but I cannot do it in 2 minutes. But it would open the opportunity that the central bank can conduct all its open market operations in its own securities. Meaning that if a member state runs into problems, and you write down in the treaty that the central bank is never, ever, under any condition, allowed to buy a public bond issued by a member state, then you have enormously increased budgetary discipline in the Eurozone, and the whole fragmentation risk has gone. And the fragmentation risk is really the thing that undermines the international position. Our capital market simply has no backbone. If you look what we including what the central bank or what the Commission and the European Investment Bank has issued, it's only such a small thing compared to the US. It's something in the same graph. In England, it's so much. We simply don't have a developed capital market, and without the common safe asset, it will never happen. And it can be done without opening the flood for the door for weaker countries, because that's absolutely not the intention. It never was. The problem is that it was hijacked by some politicians after the crisis, and then the whole discussion was dead, which is a pity. Also for the Netherlands, it really is a pity.
Nice topic for a next seminar.
Is there someone in the room who's willing to ask a question? Yeah.
Good morning. Thank you very much for the interesting presentations. I am also representing the Cooperative Banks, European Cooperative Banks Association. I have 2 questions for the speakers. First one is, I read somewhere that maybe one of the reasons why the central banks are looking into the issue of central bank digital currencies in the face of decreasing cash usage is the seigniorage income that the central banks are earning by issuing money, the seigniorage that will decrease with the decreasing use of cash. Do you think there's a role of that, this argument to be discussed? One is related to data protection privacy. We have discussed a lot this morning. And we also discussed the threat which is put by digital yuan, Chinese currency. Do you think that Chinese digital currency is a threat for Europe and Europeans, also considering the privacy, bad track record of China on privacy? I personally have some question marks on that.
Shall I take the first one and you the second one?
Okay.
And you can take both if you disagree with what I said. On the first one, on the seigniorage, I don't think that is a major issue. And if indeed, let's say the profits of the central bank would go down too far, in the end you can correct that via, for instance, introducing reserve requirements on which you don't pay interest. So no, I don't think that is a major issue.
When I may add to this, if cash really was disappearing and central banks would say this is a problem and governments would agree with that, then there are much more effective, cheaper ways to strengthening the legal anchoring of cash. In the Netherlands, you can refuse cash. Well, if you say you have to accept cash, then you will it will not disappear. Simply, it can be done easy way. You don't need a digital euro for that. It's one of the arguments that they find out. And it could be a problem somewhere, but it's not a problem in Europe. and the other is as well. As far as the renminbi, I don't think that European civilians, citizens will be very happy to use the renminbi, because you cannot use it in Europe. It could be of interest, for example, for a company that does imports from China, of exports to China. So as an international trade currency, I expect that the renminbi will become more important. And if you look at how the international position of the euro has developed, it is large, of course, in Europe. It's large in trade between Europe and other countries, because you're the dominant partner, so you decide on the currency you use in international trade. But in trade between third countries, both countries that both don't have a convertible currency, they do import-export and they use a convertible currency. Brazil exports and gets paid in dollars, not in their own currency, that kind of stuff. And that dollar is by far dominant, except in Africa, where the euro still has, for some historical reasons, a relatively strong position, which is rather vulnerable. So I expect that the share of euro international trade the coming decades will decline. And the renminbi, which is increasing, it's still very small, but in the end may be the second currency in international trade between now and 10 years. And that's where I expect that the euro will decline in importance.
Thank you. I think we have time for one more question, maybe from the online community. And then we can, if you can ask one, then I think I can wrap it up.
Yes, for the last question. This one is to Wim. You mentioned that many people at the ECB have no idea what they want to see in a CBDC. What would be the danger in that?
I think the real danger is that that decisions, technological decisions, are being made far before we know what we, in the end, do want to have. In one of the discussion, I said, we are already discussing an engine, and we are discussing details of this engine. It's a high-level discussion, but we still don't know whether this engine will be placed in a boat, a car, a rocket, an airplane, or a submarine. We simply don't know. So that the whole discussion, the feeling we have, and maybe it's just that they give us the wrong impression and we are wrong, but the feeling that I have is that actually we're running ahead with technical decisions where we should first decide what do we want, why, what does the population want, what does Parliament say. Of course, we do make the best design that can deliver what society wants. But now the technical process is running ahead compared to the political process, and that's what I don't like.
All right, I think we are running out of time, so I will wrap it up here. I think this was a very useful and interesting webinar to do, and I would love to do a follow-up soon, because I do believe that, well, to reiterate Wim Boonstra's word, the technology is ahead of what people actually know and what they want to do with the technology. We're still in an exploratory phase. There are still many unknowns concerning central bank digital currencies, but concretely the digital euro. And I think we need to continue to have this discussion. I will continue to ask and invite the European Central Bank also to explain themselves on what they are doing, why they are doing it, also to be informative to the people. And we will continue to invite experts on to comment. I hope next time the ECB will, because she had to excuse herself, Evelien Witlox had to excuse herself. She had a different meeting, but I hope next time she will stay until the end and we can just put you all three in the arena and we can see you battling it out. So I just want to thank everybody for being here. Thanks to the online community for asking such good questions. For the people who are here and who have started to feel a little hungry, there are sandwiches and there is some coffee left, so we can grab a sandwich and have a little bit of a chat. Unfortunately, for the people watching at home, I can not provide this yet. But if we have a CBDC programmed to buying sandwiches, then maybe in the future we can do so. So thank you very much, and look forward to the next meeting.
Only a healthy one.
Yeah.